purpose of this video is to help people differentiate in their minds how a professional accountant would verify a digital financial report, and how just the average Joe that, they don't really know what they're doing verifies a report. I'm going to show you something that can really happen. It happens all the time. This is a very simple example with a very small, basic XBRL report, but I think it'll make my point. So here I have the SFAC6 example. I have three pieces of the report. I have a balance sheet, comprehensive income, and changes in equity. And there are specific concepts that should be used in the balance sheet, specific concepts used in the statement of comprehensive income, and the changes in equity. So I can generate this report, and you can see the values are just all zeros. So the actual values don't matter for this demonstration. But here you can see the balance sheet, the comprehensive income statement, and the changes in equity, and everything looks good. The line items look good, and everything adds up because it's all zeros. But there's actually an error, and the average person would not catch this error, but a professional accountant would. So here is what's going on. So I'm going to actually validate this report, and I'm not going to use the more sophisticated validation. I'm going to use this simplistic validation. I'm going to delete all this stuff that this application adds to the validation. I'm only going to do XBRL validation, and watch what happens. So the XBRL validation says that the report is perfectly valid. So you have everything is green. XBRL validation was run. You can go to this report and look at details. But the primary thing to look at is if you didn't know what you're doing, you'd think this report was valid, but it's really not valid. So now let me run the more advanced validation. Same report. I'm going to select a reporting style, and that puts in some additional information in here automatically. It picks the right files, the right verification to run, and I validate this, and the report is not valid. So how can the report be valid at one time and then not valid the other? Well, the difference is the rules that are used to verify the report. So here, the second time, I use type, subtype, or wider, narrower verification rules to check the report more comprehensively. So what's going on is that it's saying that there's something in the comprehensive income network. This concept, investments by owners, is used in a calculation, but it's not prescribed to be used in the wider, narrower, or I call them type, subtype relations. So here you see those relations. And what happened was, and I'll show you this when we go back to the report, is that the creator of the report used this concept here in the statement of comprehensive income, and this was left out, and it makes it look like the report is valid when you don't check the rules. But when you do check the rules, like I did in the second verification process, you do find the mistake. So here's what's going on. So here you have balance sheet, assets, liabilities, equity. That makes sense. Everything adds up. Comprehensive income, revenues, expenses, gains, losses, totals the comprehensive income. That looks good. And you have changes in equity, beginning balance, comprehensive income, investments by owners, distributions to owners. That looks good. So what's going on? So this concept, investments by owners, was inadvertently, it's used correctly here, but if you go to the statement of comprehensive income, what I did was I intentionally used it here also. And you notice there's the concept, but it's got a different label. So a professional accountant would catch this. Professional accountants, they use better tools, they have better procedures for checking these reports. But someone that doesn't know what they're doing is going to make a mistake. And the point that I'm trying to make is that basic XBRL validation does not catch this type of logical mistake. But enhanced XBRL validation, where that we've created here in this application, it does do the right verification steps to verify that the report is in fact incorrect. So you can be aware of the mistake and then go back and fix the mistake, rather than be unconscious, not use the rules, have a mistake in a report and not even be aware of it because you didn't verify the report correctly. So I'm going to call that good.